You know what? Let's just get this out of the way. Hi everyone, Keith Wilson here, spreading a wealth of information. Happy New Year. Like you, I'm glad to see 2020 go away, and I'm looking forward to a bright 2021. Now, this is the time of the year you're going to see a lot of predictions, a lot of forecasts for the markets and the economy and what lies ahead. But before I get into what I believe is in store for 2021, let's quickly review 2020. As you know, we had the worst pandemic in 100 years. Geez, we had a deep recession, a bear market, election uncertainty, but hey, it was still a good year for certain stocks. And you would think that with the stock market, being down more than 30% in late March, it would take, possibly years to recover. But hey, it was a pretty quick comeback in just 6 months. And a lot of people are asking me, hey, how can this be? Well, here's the thing. The economy and the stock market are different. You see, the market is forward-looking, and it's speculating on better times ahead, while the economy, it looks backward and it's giving us information on what's already occurred. So during the first half of last year, when it was pretty evident that we were going to slip into a recession, I had a lot of conversations with my clients, and I was telling them, hey, I believe this is going to be a short-lived recession. Now, it's not official at the time of this video, but it does appear to be over and probably lasted less than 6 months, which would have been one of the shortest recessions ever. Now, I believe we are entering a new economic and bull market cycle, and we've got forecast of 4 to 4.5% of GDP growth in 2021. Also, I believe we're going to see inflation rise a little bit above 2%, and that's most likely in the second half of 2021, which would be driven by possible slower wage growth. So, if we are indeed entering a new economic expansion, you might be asking, well, how long does that typically last? So, according to this chart, expansions last on average 5.3 years. So it's suggesting we may have more years to run. Now, as far as equities, after, really a strong rally from March 2020 lows, one might think that going forward, returns would be muted. But according to the LPL Research Department, on average, stocks have historically gained about 65% during the first 2 years of a new bull market, after gaining an average 41% during year one. Even with the S&P 500 roughly 60% above its March 23rd lows, we see further potential upside in 2021. Now, I think it's really going to hinge on a safe and effective vaccine in early 2021, and that could give the possibility of exceeding these historical averages. So, if that's the case, here are a few things to consider when allocating your portfolio in 2021. First, consider adding small caps to the portfolio. So, small companies, they tend to rebound faster in growing economies, much more than the larger companies. You see, here's the thing, their fate, it's not tied directly to interest rates or other economic factors to help them grow. But here's the thing, small caps, they tend to be more volatile than larger companies, so you really have to assess your risk tolerance levels. Another thing, take a look at emerging markets. They're forecasted to outperform developed markets in 2021. But keep in mind, emerging market economies, they can offer greater returns to investors, and that's really due to rapid growth, but they have greater exposure to inherent risk based on their status. So keep that in mind. Hey, tech stocks, they're really positioned to continue strong earnings growth in 2021. As you know, we're in an environment right now where people are working remotely and schools are remote. So keep that in mind. Communication services, digital media, like e-commerce stocks, they're similarly well positioned as much as tech stocks. So overall, 2021 shaping up to be a positive year with strong recovery potential. But while this is a forecast, what the economic and market data looks like, things can change. Hey, after all, who could have predicted a global pandemic? So that is why it's important to consider active management and a well-diversified portfolio. Hey, if you'd like to see more videos like this discussing personal finance, be sure to hit that subscribe button below. I would really appreciate it. Thank you. Happy New Year. And remember, be wise with your money.